let's talk about expectations and what we should expect from each of our 3 portfolios. Strategic, core, and tactical. Each have different investments and each have different expectations. Now, for strategic, over any 12-month period, we expect strategic to be up or down within 5%. That's normal, healthy volatility for a portfolio such as this. That being said, over any 12-month period, it is hard for this portfolio to be up or down more than 10%. If that were to happen, something very unusual is going on and we need to be raising eyebrows and asking questions. Now, when we think about core, it's actually double the amount of strategic. Over any 12-month period, it's normal for this portfolio to be up or down within 10%. That being said, it is hard for this portfolio to be up or down more than 20% over any 12-month period. If that were to happen, something very unusual is going on, and we need to be raising eyebrows and asking questions. Now, tactical is a little bit easier to understand. We actually don't have any expectations for what a tactical portfolio will do. Now, let's think about that for a minute. Let's discuss the S&P 500. Now, people get a little bit crabby with me if I want to talk about 100 years of stock market data, but pretty much everyone will let me talk about since the year 2000, the last 15 years. So over the last 15 years, there have been 2 periods of 12 to 18 months where the S&P 500 has risen about 50%. Really great times. But since the year 2000, there are also 2 periods of 12 to 18 months where the S&P has fallen about 50%. Think about it for a minute. 4 times in 15 years, the S&P 500 has done something totally crazy. Now, if I didn't tell you what asset we were talking about, but I merely gave you those return characteristics, you would say that's a tactical investment. And that's right. So anything tactical, we assume can go up or down 30, 40, and 50%. Thus, we don't really have expectations for what this is going to do. Now, if we think about this, this really plays into what happened to many people in 2008. In 2008, many people said, so I have a safety style or strategic portfolio, that's great. But then the bulk of the rest of their assets were the S&P 500 US stocks. They thought this was a core style portfolio. And then when it was down 30, 40, 50% in 2008, they said, wait a second, this doesn't make sense. I didn't think I was taking that much risk. I didn't think I was being tactical. They thought they had a core portfolio, but they really had a tactical portfolio. They got their allocation exactly backwards. They were taking too much risk and they didn't even recognize it. Expectations are very important, and these are the expectations we have for our 3 portfolios.